Hey there. Welcome to episode 47 of Money Never Sleeps, a podcast that looks inside the head of entrepreneurs and at what makes them do what they do. I'm Pete Townsend, your co-host of Money Never Sleeps, along with Owen Fitzgerald. This episode of Money Never Sleeps is kindly sponsored by Ireland's Fintech and Financial Services recruitment specialist, Top Tier Recruitment. If you or a colleague need help attracting and retaining great talent for your fintech or financial services company, we highly recommend you have a chat with the team at Top Tier Recruitment, as they really know their stuff. You can find them at toptierrecruitment.com and tell them we sent you. We went on location in the friendly confines of Howth on the north side of Dublin to record this episode in the offices of startup.com, which was a perfect backdrop for the conversation that took place. In this episode, I chatted with Matthew Merle, the managing partner of Fifth Era and Keiretsu Capital, who combined are the most active early-stage venture investors backing almost 200 companies a year. In prepping for this interview, I kind of had the feeling we'd share a similar view of the financial world, but man, did I learn something on this one. So thank you, Matthew, and away we go with episode 47 of Money Never Sleeps.
Money never sleeps.
Here we go again. Welcome to Money Never Sleeps. We're here in the offices of the startup.com in Howth in Dublin. I'm Pete Townsend, and I'm on solo this week with Matthew Merle, co-founder and managing partner of Fifth Era and Keiretsu Capital. He splits his time between the UK and the US, but today he is on live from San Francisco. Welcome to the show, Matthew.
Very good to be here, Pete, and thank you so much for having me on.
Awesome. Thank you. So, Matthew, you and I were introduced through Briege Tinley, who heads up the European business for Securitize, a business on which you're the chairman for Europe, and one which I've been following recently with the work that I'm doing, which we've talked about before, but today is more talking about you. So we'll get into that in a second. But maybe just for our listeners, why don't we get started with your backstory and how you got to this point?
Sure. So I'll give you the short version, and you can ask questions if you want to know more. But I grew up in the UK, went to university in the UK, joined a consulting firm, McKinsey. They sent me to business school in America, and I never came back. So since then, it's been 30 years in California. First as a consultant, working with big tech and financial services companies, people like Google and eBay and Microsoft as a consultant. And then about 20 years ago, we became very active investors in early stage tech, and we've done that ever since. My wife, in the interim, Alison Davis, became CFO of BGI BlackRock, which is the world's biggest asset manager, and she's on the board today of Royal Bank of Scotland in the UK, as well as Fiserv and other businesses. But our investing activities are very focused on early stage and mid stage electronic commerce, digital content, fintech. And because of the fintech piece, we're also very active in blockchain.
Okay, very good. And across all those different things that you do, what's kind of the split of how you spend your time?
Well, I spend all of my time on disruptive early stage technology companies that are helping move us into the new digital world that we are all already immersed in, but which is going to change a great deal more in the next few years. The exact breakdown of my time changes every week. As you might imagine, I do spend a week a month in London and in the UK, and 3 weeks is typically in California, though I have to be occasionally in Asia as well. And I'm managing funds, which we can talk about later. I'm making active investments, and then I am chairing the boards and I'm active advisor to a handful of companies as well, of which you mentioned Securitize, which is a truly amazing team and company. I'm also doing a similar role at Link2, which is a private investment platform, at Concept Art House. And then finally, I'm also an advisor at Warburg Pincus, which is one of the largest private equity firms in the world.
Absolutely. Maybe just to talk about for a minute, Matthew, making that transition, even though it was 20 years ago, so let's put on your thinking cap here, from having spent your time as a consultant to the stage of, well, starting to make investments in early to mid-stage technology companies. How did that transition go for you, and how do you think that set that up for the rest of your career?
I think it's not an easy transition for anyone to go from whether you're an entrepreneur, a corporate executive, a professional, lawyer, an accountant, a consultant, whatever the background is. When you try and become a full-time early stage investor, I think it's a very steep learning curve. You make a lot of mistakes along the way, but you have to experience them firsthand. And it takes a while for you to begin to appreciate what people told you at the outset, but which you didn't necessarily hear. In my case, I thought I knew a lot. I knew a lot about companies and industries, go-to-market strategies, fundraising, and things like this. It took me a while to realize that you can't even do due diligence on an early stage or mid-stage company unless you have a whole team of people, because there's just so many facets and there's so many, and I had so many blind spots, and it took a while to understand that I wasn't qualified to do technical due diligence, and I wasn't qualified to do IP assessments, and I wasn't qualified to really set up a corporate structure properly.
Yeah.
And I fell into a lot of those mistakes, and my teams that I was backing often made mistakes, which now, 20 years later, we could easily avoid.
Okay, that makes sense. I mean, because with some of the activities that I'm involved with, Matthew, I'm kind of hearing some similar, at least some parallels in terms of making that transition out of, for myself, 20 plus years in the asset management industry, 3 years now working closely with startups, but now thinking about raising a fund and investing in startups. I'm already starting to think of, hey, I'm working with a number of startups right now. How do we start to delineate between those truly incredible founders that will perhaps deliver us a home run from those that will end up, running lifestyle businesses in a small market, right?
Yes.
And
so on that point, Pete, I mean, in fact, Alice and I, our first book that we wrote, which you can find on Amazon, Apple, and elsewhere, Build Your Fortune, was all about this topic. It was synthesizing 15 to 20 years of early stage investing and just laying it out. What are the realities? What are the best practices? What are the pitfalls and risks? And but it takes a while for an individual to appreciate them. This is early stage investing is a hit driven business. Most of the time, the projects and the teams fail and you receive no money back. A small number of times you get a good exit. And so you have to be very highly diversified, and you have to have strategies that get you into the inside circle of the best investors and the best projects. And that takes a lot of time and energy to build those relationships and networks. But, at least here in Silicon Valley, you do not want to be just a flyby angel investor picking off 3 and 4 opportunities. That way, there's a high probability of total capital loss. So really, you have to apply the best practices, but it takes, as I say, it takes a while to learn what those things are. And I've mentioned a few already: broad diversification, access to the best teams and investors, and a value-added role so that you get kept at the table rather than over time displaced. There's a bunch of others as well.
And let's talk about that for a minute. You've mentioned your first book there, which sounds like something that I will be checking out. And you've written 3 books, and I think your second one was on corporate innovation, and then your latest one, blockchain competitive advantage. Maybe talk about that for a minute, and the inspiration for penning that with Allison.
Yes. So this. I'm not quite sure exactly, Pete, who your audience is and what's the mix between entrepreneurs, investors, and more established, executives or professionals.
We have a broad mix, so you can assume that it covers quite a broad audience across entrepreneurs, across those in the in corporate roles, with a lot of that coming from the financial services area. And then just, the wider startup ecosystem.
Yes. So the arc of our thinking over the last 3 or 4 years, as we put down our thoughts on paper and made them available to everyone, it began with just an appreciation after running the world's biggest, or helping run the world's biggest angel group, Keiretsu, where we invest in about 200 early stage companies every year. I just realized that there are a lot of things that new to the world investors and entrepreneurs launching their first initiatives into early stage tech, there are just a lot of things that if you understood, you would avoid some obvious mistakes and pitfalls, and that we might as well put them into a book. And there's an awful lot of books out there about the essentials of angel investing. So that wasn't our tack. Our tack was more, does an individual think about how they want to participate and whether or not they should participate in what we believe is the most important defining time of human existence. We are transitioning to a digital world, and that is so dramatically different from the industrial era that we've lived through that we really should be clear and choiceful in the way we participate. As individuals, we are sitting and a part of a dramatically changing world. Huge amounts of value and wealth are being created. And the truth is almost everyone is not very actively participating. Yep. And if that's a choiceful decision, if that's a choice to not participate, then fine. But if people aren't choosing to participate because they don't know the realities and the facts and what's happening, then that's a shame. And so that first book just is about that.
Okay.
The second book, Corporate Innovation, Alice and I, over our careers as consultants and investors and corporate executives and board directors, we have had a lot of exposure to Google and Amazon, Apple, Facebook, and Microsoft, sometimes as strategists and consultants, sometimes as business partners and other things. So we wanted to create a book that just synthesized how do those companies go about innovation, and to what extent is it similar or different from how a traditional large multinational company goes about the same. And it's an empirical book. So we find that if executive teams, directors, board directors, and senior executive groups read this book and then they hold it up as a mirror and look at what they're doing, most of the time they come away with a raft of things that they could do more of or that they could add to what they're already doing. So that was the purpose of that book. It's sort of, if you remember, In Search of Excellence, it's sort of In Search of Excellence meets disruptive innovation. And then this third...
A bit of Clayton Christensen influence in there, perhaps.
We looked at the 5 companies and we said, let's just lay out what they're doing from top to bottom. What does Google or Amazon or Facebook do when it comes to driving their innovation activities? And that's what this book is. It's almost just an empirical assessment of those 5 companies, but then we shape it up, if you will, into a summary construct. And we find that, when boards of large companies read the book and they look at what they're doing, they get a better appreciation of why they're not doing enough.
Okay.
Yeah. And then this third book is sort of, in a way, a continuation, but it's very focused on the next phase of the evolution and, to some extent, the fixing of the internet that we have and the big issues that need to be resolved for us to move to a fully digital world. We then look at why blockchain holds so much promise. So it's not a book about blockchain. It's a book about why the world needs to be evolved in certain ways. What are the big issues that need to be resolved, and why does blockchain hold promise? And then by the time we get to the end of that, our view is that the blockchain community is now moving into an early competitive phase. And it turns out when investment, when areas of new innovation and investment start transitioning out of their first few years into an early competitive phase, it is actually important that the entrepreneurs, the investors, and established companies all begin to change their behaviors and activities and their strategies. And so we detail that in the book. So we can talk more about that. But fundamentally, if you were an entrepreneur or an investor or a corporate executive on this call, that last book is just, we think, a rallying cry for what are the ways to establish competitive strategy for the next 3 to 5 years.
Yeah, I really like the thrust of that, Matthew, because when I talk to people about blockchain-enabled startups, what I say to them is, listen, if I see blockchain mentioned on page 1 of the pitch deck, it goes in the bin. I want to see it on page 8 of the deck where they talk about their tech stack or their secret sauce, and that They've looked at all the technology available out there, and blockchain or distributed ledger technology happens to be the best suited for the value proposition that they're delivering.
I absolutely agree, Pete. What that's one of the things that changes. So when you get a new innovation, a new technology at the beginning, it is scientific, it is research oriented, it is about the technology, it is about what the technology can do. But when you start moving into more of a competitive phase, it's much more about users and value propositions and the problems you're solving. And if that technology can help, fine. But if it can't, you don't become slaves to a technology. You find the other technologies that you need to bundle together, or you maybe pivot altogether to some other approach. And so I'm agreeing with your point. If entrepreneurs are pitching, we're going to use blockchain, and here's why, they've got it the wrong way round in this time frame. They have to start focusing on this is the world problem we're solving, and this is how we're going to do it, and this is why blockchain matters. And if blockchain doesn't matter, it shouldn't be there.
Exactly. And then if you are, it sounds like with the blockchain competitive advantage book, that it is, like you're saying, the world has become digital. There are those that are racing ahead, and there are those that are kind of keeping pace, and those that are lagging behind. And that whether it's blockchain or some other technology that enables a business model or a process or human interaction to move to a fully digital state, it's a heck of a lot more about digital than it is about the underlying technology.
Yes, yes, Pete. I think the way Alice and the reason why we call it the fifth era is because we refute the notion that it's the fourth industrial revolution. And what I mean by that is, I think a lot of executives and even a lot of investors think that we're going to take the world we've been in and we're going to evolve it and we're going to incrementally modify and adjust it. And so it's a continuation of the past. It's the fourth industrial revolution. And we actually refute that. We think that the world is truly shifting into a very different world. It is one of the characteristics is a fully connected, digitally enabled world where issues of, for example, scale, economies of scale, and regional and local operations begin to be questionable. The basis of advantage shifts, and the way people play the game is dramatically different when you have a connected digital world. I know on this call we're not going to talk about life sciences, but that's the other big one. We began to edit plants and animals. We can now change human life itself. Societally, we don't know if we want to do that, but there's no question the future is going to be full of a very different set of issues that humankinds are going to need to grapple with. And that was a Freudian slip because I said humankinds instead of humankind. But we're on the precipice or on the beginning of a steep upward climb about how we change the health and well-being of human beings around the world. And we've societally got to figure out which paths we take on the life sciences front too. So an awful lot is going to happen in our lifetimes, and it's not a continuation.
Oh, absolutely. And one of the investment theses that I'm working on is really around, this kind of connectivity that, you may not think too much about, but the fact that you brought it up makes me even think more about it, is that I have a vision in my head about what the future of the financial markets will look like. And I can see the technologies that are, enabling that going forward. On the other side, what I can't see myself, but some of the people I'm working with can see what the future of life looks like, right? And that what are the types of things that will be changing how you live your life on a daily basis. And there are technologies that are enabling those things. And what is the interesting crossover between the future of money, right, and the future of life, and the technologies that enable both. So I think there's something there that is quite interesting. Just kind of on that note, with the three books, Matthew, there are some strong themes. It sounds like in each one of them, all related. and that, one building upon each other with each publication, more or less. Is there have you built kind of a breathing, living model of investment themes that could root back to what came out of these books that you use when you're looking at the companies that you're investing in to say, hey, this is what I believe in, these are the themes, and you can get those themes by reading the books, right? And that you then use to determine what you're going to make investments in.
Yes. So I want to clarify a point here, and I think you've put your finger on it. Actually, we are not professional authors. We don't spend our lives writing books. We are investors, corporate executives, and directors. And what we do is try and find teams that can change the world, invest in those opportunities, and then, to the extent to which it makes sense, get involved in helping them scale up. And then we also, as I already mentioned, also work with some of the world's biggest companies as board directors and advisors. The books were created first because we wanted to get down our own thoughts about why we're doing what we're doing and what really matters. And I think one of the hardest things when you go out, and so going back to your very first question, when you first enter this world of disruptive innovation and change, whether you're an entrepreneur, an investor, or a corporate executive responsible for innovation, or indeed any other player in the space, the first thing is it's incredibly confusing and it's easy to lose your way because you are in this fairground, if you will, this fairground of unbelievable, rides and amusements, and it's so easy to be distracted and to lose sight of what really matters. So we wrote these books to just nail down for ourselves what really matters, and they weren't initially books; they were just thought pieces and lists and the like. And then we said, well, why don't we share it with everyone? But so going back to your question then about can you derive our investment thesis from reading the books? The answer is not only can you, but we explicitly lay it out. We believe in broad diversity. We believe that the world's highest returning asset classes are early stage technology and small cap real estate. We think that those asset classes are not accessible and available to most investors in the world who have most of their resources in public equities, fixed income, and large cap real estate. But we think that to gain access, it requires an enormous amount of work. You have to have the relationships and network to get into the inner circle of the best deals and the best investors. And you have to be broadly diversified, which is also a real challenge because we're talking about 40 and 50 investments and up in any given theme, given the distribution of outcomes for individual projects and companies. So our investment strategy, which I'm happy to share later on this podcast, is explicitly laid out in the books.
Okay, interesting. And if you think about your 20 years of investing, Matthew, at what point in time during that life cycle did you realize, hey, I might be pretty good at this, or hey, I've nailed it, or I've got something here?
Yes. Well, so the life cycle of an early stage investor is almost always the same. You start off full of excitement. You place a few bets. You get very committed. You work really hard. You help the teams. And then the bad news starts first. And some of them begin to go out of business. It's very painful. You lose your money. You get depressed. But then a year or two later, some of them begin to do well. And so you begin to climb out of that trough of despair, and you begin to, if you've been sufficiently diversified and if you've done a good job of placing some bets in a wise and thoughtful way, we see that diversified angels and early stage investors begin to see some good outcomes. And then eventually you get surprised by one or two big ones. And suddenly your IRR is looking very attractive. And all of the research, at least in America, all of the analysis, the professorial and academic research and so on, all says you end up with the same result, roughly, which is It's a very high IRR, 25, 30% IRR over a 25-year time frame. The failure rate is huge, 50, 60, 70% total failure. And you get maybe 5 to 10%, 5x and better, and they drive 80 and 90% of the capital you get back. So it's a hit-driven business. And when you talk to professional early-stage investors, they always end up with roughly that average profile from a diversified portfolio. And then you have the outliers. And so you have a few people that in their portfolio, they caught a Google or a PayPal or something like this, and their IRR is right through the roof. And then just mathematically, you have a few poor souls who were still broadly distributed, but they lost all their capital because they just were on the wrong side of the mathematics. And we consistently see that is that's the journey and that's the outcome. And those of us who do it full time have all experienced that journey, and it's not for the faint-hearted. I mean, there's a lot of easier things to do than becoming an investor in early stage technology. But on the other hand, you go home every day and you're full of the optimism and the ambition of the entrepreneurs. You're involved in things that are changing the world, hopefully to be a better place. And you're solving some of the world's biggest issues. So it's very gratifying, and there's a lot of meaning too, but it's very painful in years 3, 4, 5 as your projects begin to go under.
I'm hearing a lot of my next question, Matthew, already, which it focuses on the personality traits that you think have been the most helpful to you over the course of your career. And I'm hearing not faint-hearted, 1, purpose-driven, 2. Would that be on point? And what else is there that have the characteristics that have driven you forward?
Yes. Well, I want to be clear on this one, Pete, because it's a great question. What's driven me forward are the amazing entrepreneurs that we've met along the way, and the characteristics, the behavioral characteristics of entrepreneurs continue to amaze me. I really don't think it's easy to be one. I think they're born as much as they are made, and they are very few in number. So, here in America, we have 300 million people. We have, the VCs back about 5,000 or 6,000 startups a year. The angels back about 70,000. On average, there's 1 or 2 entrepreneurs attached to each. So you're talking about, at most, maybe 100,000 entrepreneurs being backed a year out of 300 million, but half those entrepreneurs are not American. They've come to America. They're Irish, they're French, they're Chinese and Indian. So I think that I would say all of our success and all of this change is resting on the shoulders of a small number of entrepreneurs. And they are the prime actors in this story, and their behaviors and the way they make things happen always amazes me, because I don't think I could be one of them. I think that they are a very valuable set of people. And if you're one of them, don't hide your light under a bushel, so to speak. Become an entrepreneur, because you can change the world and most of us can't.
Yeah, I hear that. One of the common recurring themes on the podcast guests that we've had here on Money Never Sleeps, Matthew, has been going through brick walls or over or under or whatever it takes.
Yes. Yeah, I do. I agree with that. We could have a conversation about our educational systems and are they well engineered to create these types of people. But I bet that in the middle school years, entrepreneurs were typically disruptive influences in the classroom. And a lot of us spent a lot of time trying to stop them doing what they naturally want to do. But you're right. By the time they're the CEO of a startup, they are never taking no as an answer. They are breaking down doors. They are just making things happen. And it's pretty remarkable to see.
Anything that you've learned over the way across the years, Matthew? Any particular lesson learned that you might have had that you would care to pass on to our listeners?
Well, given that, so I think we've already covered a lot, but since you and I are fintech investors to some extent, then I think we should spend a moment or two on the thesis of why native digital monies and native digital assets really matter. And in a nutshell, and to keep it short, because it's written about a lot in our latest book, but just to keep it really simple, we've spent 30 years creating a globally connected digital communications platform that we call the internet. And it was never intended to be a commerce platform. And indeed, it's fundamentally flawed when it comes to issues of security, identity, trust, and the way the actual transactions and commerce occur, because the protocols didn't have that as a goal. So we know that the second shoe that has to drop in the next 20 or 30 years is we have to migrate the internet we have to be more secure. We need identity and trust that are natively written into the protocols. And we have to have native digital assets and then native digital monies, but more importantly, in my opinion, native digital assets, because it makes no sense for us to have the stock of the world's wealth, 50% or more in paper, when everything else we're trying to do has gone electronic. And it's really only public equities, fixed income, and a certain amount of large cap real estate, which are truly electronically enabled. Half the world's assets are still done in paper and in folders, and they take 30 and 60 and 90 days to settle. And all of that has to shift if we're going to have a truly digitally connected economy. And so I think that is an investment thesis and theme that's going to carry people like you and I through at least the next 20 years. It's not going to happen fast. And anyone who thinks we're all going to embrace digital currencies, as an example, in a year or two is I think, way out. This is a great Christensen point. This is going to be crossing the chasm. This is going to be 10, 20 years. And if you're in the right place, but too early without the resources to compete over an extended time frame, you're going to be a loser. So you've got to really worry about that. Adoption is going to take a long time, but the world is going to change, and the value that's going to get unlocked is going to be enormous.
Absolutely. I like to use the analogy that, 20 years ago, when I was working in the hedge fund servicing world, and that light went off that we could communicate with investors by email rather than fax machines, right? That was a big moment, right? But 20 years on, fax machines still exist. They're still used in how investor communication happens from time to time.
Yes.
So yeah, there's a long arc here, but hopefully it curves towards digital sooner rather than later.
Yes, well, I have my own little story, which is very analogous. I did it and then I forgot all about it, and now it's in my mind a lot, which is one of my first projects as an analyst at McKinsey in London was working on the Big Bang. And for those people listening in who don't remember what that was, the London Stock Exchange had to be driven into the future, first because an antitrust grenade was thrown at it around about 1983, and then fixed minimum commissions and the job of broker market maker and open outcry exchange were all eliminated in favor of technology-enabled investing. And it took about 5 or 7 years. And then today, all of the public equities pretty much in the world, or at least in the organized world, are all digitally enabled, and you have high velocity trading and all these types of things. Well, we didn't do that for most of the assets in the world yet. So most of the world's real estate, almost all of the world's private equities, and many other areas of bonds and the like are still paper-based. So we just didn't get to the digital moment on half the world's assets. And I think that's now about to happen. So I'm very excited to be involved with Securitize, who are a great team and are really at the forefront of building compliant, digital asset platforms and capabilities. And I think we're going to see an enormous change, but it's going to take a while. It's not going to happen fast. Yep.
I've got a lot of time for the guys at Securitize. Had a good chat with Carlos Domingo a couple of months ago. and got to know him a little bit. So just like I said, keeping my eye on what's going on there, and really interested in seeing Securitize succeed. So I think we're at the point, Matthew, where we can probably sum up what we've talked about in the last half hour or so before we get to our last question. I think what we talked about is clearly, being an investor in early stage tech is a lot of it that is about finding teams that can change the world and then helping them to scale up. I understand that, when you've made that change from consulting and the big corporate consulting to investing, it is quite a change. And I don't think it's anything that anybody can prepare themselves for. You just got to do it. And I'm kind of feeling that as well. I'm hearing a lot of time and energy required to build a network and the deal flow. It's not just something you can flip on. And like you said, go out and, just do 3 or 4 investments here or there in Silicon Valley. It's a full-time thing. And it needs to be one on the basis of leveraging your full network and leveraging all your relationships. I think that, your investment model around broad diversification, access to the best deals, and then having a value-added role after investment, I totally get that, and it's something that I believe in as well. You talked a bit about Fifth Era, and that's what we're in right now, and not the fourth industrial revolution. We're really moving to a new paradigm, and that is clear. I hear that in terms of driving things forward, that it's amazing entrepreneurs. And I think we can all find inspiration in them. And they are definitely born as much as they are made. And talking about being that disruptive kid in 5th grade or 6th grade, that was me. Absolutely. So taking things from a bit of a different angle. And then finally on the native digital assets, yes, absolutely. 50% of the world's wealth in paper still, when everything else is electronic. I think those are some of the key themes that we talked about. But is there anything else that you wanted to just reiterate before I get into kind of the last question?
Yes. Well, firstly, that was masterful, Pete. I'm very impressed that you synthesized all of that so well. And thank you for doing that. As I think about your audience, I guess there's a couple of other things we haven't touched upon, and we'll do this really quick. The first is, even though I do believe that the world needs more active players, so active entrepreneurs and active people who will back them, early stage investors, I think it's okay to be passively active too. And what I mean by that is it is possible to lend your support to entrepreneurs by opening doors, helping them succeed. And it is possible to be a passive investor and still get capital into this space. And that's one of the things we've done. We've created, for example, a blockchain fund of funds and a digital fund of funds where we pool other people's money. Anyone on this call can participate if they're an accredited investor. And then we hand out that money to the world's best blockchain VCs and Silicon Valley's best micro VCs. So you can be passive too, but I think you should do it choicefully. And I do think that for most people, being an active entrepreneur and an active angel may actually not be the right answer. And then the second thing we haven't talked about is Ireland. I know that you're based in Ireland, and I just want to make a point here, which is there is no monopoly on innovation. And it's possible to be a successful entrepreneur and get started in any of the world's digital hubs or innovation hubs. And clearly, you've got one of the largest just a short ways from you in London. But I know there's a lot of great innovation in Dublin and in places too. And I've visited, and I've actually backed a company, Soundwave, that was backed in Dublin. And it was a great team. We got to a good outcome with Spotify. So anyhow, I'm just making the point that you don't all have to jump on planes and come to Silicon Valley or Shanghai or wherever. There's no monopoly on innovation. And I do think we're in a distributed world. And I think we'll only see that distributed innovation continuing to spread out. And I think that's a good thing.
Absolutely. I fully agree. You can build a business from virtually anywhere these days, as long as you have good Wi-Fi and that you have connectivity. One of the excellent things about Ireland is that from a network perspective, it's really 1 to 2 degrees of separation, whereas elsewhere in the world, it could be 3 to 4 to 5. And so if you need to talk to somebody, if you don't know them, you know someone who does. And that
Yes.
you can move quickly. But with Ireland, it is a small market. It's 5 million people. You need to prove yourself here first, and then quickly scale. And although it's not move the business to Shanghai or Silicon Valley, you do need to have your passport in hand and a ready plane ticket, economy class most of the time, to jump on opportunities that may come up in those markets, right?
Yes, and wearing my other hat, of course, Silicon Valley, we would love to poach the brightest and the best from every other region and country in the world, and so we're open. We're an open door still, and a lot of great people come here as well. But I just wanted to make that point that I don't think you have to jump on a plane. I think that access to capital is really more the defining issue. And so it's great to hear, Pete, that you're trying to raise a fund that I assume will focus on local entrepreneurs and opportunities. When there is no capital, the entrepreneur has no choice but to get on the plane. But we are seeing the creation of a lot more local funds, and capital is flowing more readily, I think, to early stage technology and entrepreneurs in digital hubs around the world.
Absolutely. And we hope to make that more readily available and leverage the network and the closeness that we'd have to the founders to be able to do that. And when I talk about jumping on a plane to Shanghai or Silicon Valley, hopefully it's to go talk to a customer, if not an investor. And, I think that's the ambition. It's been a real thrill talking through all of this with you, Matthew, given, the angles that we've come at this industry from. What we like to do to close the podcast is to ask you, what is one thing that people wouldn't expect to know about you?
Well, I'll tell you what, there's a few things that I could answer with, but I want to tell you about my fourth book, just because it's a personal hobby and it's a science fiction novel. It's also available at Amazon and Apple. And I think most people would not expect that I would have written a dystopian sci-fi novel, but the 8 and 9 and 10 years old, I always wanted to. I never got round to it. I'm today 57 and I finally wrote it down. I hope you'll think it's a good story. It's very relevant in the context of everything we just spoke about, because it's sort of it's a bad outcome. It's a negative scenario, and it's one that we all need to avoid. And I wrote it down as sort of my life is about trying to get to the good outcomes. I thought it would be fun to write on paper what could be a bad outcome. And so that's what that book is all about.
Wow, that is impressive. And that shows you're really thinking things through, right?
Well, actually, I, as a kid, was a big sci-fi and fantasy reader. And I do believe that in science fiction, we do see glimmers of the future. And I think a lot of entrepreneurs and a lot of engineers and developers do get their inspiration from being able to read a picture of the future and see things in, operating at least in a fictional way. And then they try and make them a reality. I've just written a dystopian book where, even though there's a lot of optimism and hope, the world has got to a very bad place.
Yep. And there's elements of that dystopian universe that I'm sure some of those threads are evident in the world today. But it's very interesting. When is that? That's your fourth book that is coming out shortly, or is that already out there?
Well, actually, I just did a bad thing, because I was not supposed to promote the fourth book. I'm supposed to be promoting the third book, which is Blockchain Competitive Advantage, available everywhere. The sci-fi book is already up on Amazon, Apple, Smashwords, and everything, paperback, hardback, but we're not promoting it because authors are not supposed to promote two books at once.
Absolutely.
But I'm not a professional author, so I couldn't hold it back, and I just told you about it regardless.
We'll let you get away with that one, Matthew.
Well, I really appreciated this, Pete. You asked good questions. I hope that the listeners got some value from this. I'm very available, so anyone who goes to fifthera.com can learn what we do. It's fifthera.com. And my own email is right there on the page. And I'm more than interested in inbound we are the world's largest angel group too. So oftentimes I can make a connection if an entrepreneur is trying to raise money. We ourselves don't do as much direct investing as the world needs. But we're also always interested in speaking to potential investors who want access to the most interesting tech investments in the world.
Perfect. That is great to hear. And I'm sure that a number of listeners may actually get in touch with you on that, Matthew, so get ready. But I think you and I will continue our conversations offline at some stage. So thank you so much for coming on to the show. It's been a real pleasure, as I said, and I wish you the best of luck in everything.
And to you too, Pete. I really appreciated it. Thank you.
Thank you, Matthew.
Money never sleeps, pal.
That wraps it up, folks. Thanks to Matthew for opening up his mind to help us figure out why he does what he does. Remember, if you or a colleague need help attracting and retaining great talent for your fintech or financial services company, get in touch with the team at Top Tier Recruitment, as they really know their stuff. You can find them at toptierrecruitment.com. Also, if you'd like to learn more about Matthew, check out fifthera.com for details and amazon.com for all the books he co-authored with his wife, Allison C. Davis, especially their latest one, Blockchain Competitive Advantage. Remember, if you or a colleague need help attracting and retaining great talent for your fintech or financial services company, get in touch with the team at Top Tier Recruitment, as they really know their stuff. You can find them at toptierrecruitment.com. If you like what you heard today, please subscribe to Money Never Sleeps on iTunes and leave us a 5-star review. You can also subscribe via our website to channels like Spotify and Stitcher, so just go to the subscribe page on moneyneversleeps.ie and follow the links. If you're searching directly on iTunes or Spotify, Money Never Sleeps is spelled as all one word. For more info and links, check out the show notes on moneyneversleeps.ie. You could drop us a line on info@moneyneversleeps.ie or @MNSshow on Twitter. As for me, I increase the odds of startup success. DM me on Twitter @PeteTownsendNV if you want to know more. And you can follow Owen on Twitter @OwenFitzgerald9. Finally, thanks to Conan Brophy from Create Sound for editing this podcast. Till next time, thanks for listening. See ya.